What's up, kids? Welcome back to another video, and in today's video we're going to be jumping into the price of Bitcoin, discussing the ETF and a bunch more things. But I just wanted to bring this part of the segment from in front of Mount Fuji. Let's jump into the video and discuss Bitcoin. I've been away for a couple of days enjoying Tokyo. If you're in Tokyo, let me know in the comments section below where to visit, where's the best place to go. But I'll see you very soon. I hope you guys enjoyed that nice little intro from Mount Fuji. For all of you that were wondering where I was last week, I was in Japan. And honestly, I had some of the greatest times of my life going to Tokyo, Kyoto, Osaka, Hiroshima. I was with kids my age for the first time in a while, and it felt refreshing. But going over into the price of Bitcoin, it's not been doing too much either. We do have some fundamental analysis to catch up on. What we can see here critically is that Bitcoin is attempting to break above this bullish pennant on the 4-hourly time frame. So the price has been converging, and now we're seeing a little bit of a breakout, not yet confirmed. But in today's video, we'll be going into what my personal price predictions are for Bitcoin and a lot more. So stay tuned, leave a like, subscribe, turn on the notification bell, and let's jump straight into it. So Bitcoin is seeing a small breakout here. And what I want to do is I want to open a small low risk breakout trade just in case Bitcoin decides to head lower. So I'm going to go into market, very low leverage, and I'm going to put in just, let's say, 300 USDT. And I'll just add to this if we do see the confirmation after this video. So I'll press confirm, and we should be having a trade open. If you guys do want to be trading Bitcoin and other cryptocurrencies, make sure to check out the description in today's video to sign up to Bitflex, which is the exchange that I'm using to get up to $68,888 worth in rewards. But I'll discuss where I'm going to be putting my take profit and stop loss in just a second. It is a risky trade because it's not confirmed that this breakout will take place. That's why I'll keep my stop loss tight just in case that Bitcoin decides to see a reversal down. So in terms of targets, what am I looking at? There's also an inverse head and shoulders forming on the macro time frame. So if we go over here, you can see we clearly had a huge left shoulder, head, and then right shoulder. For a breakout trade on the inverse, what we do want to look out for is a break of the neckline, which is sitting at $43,300-ish. So if we do see a breakout here, then the target for me will be the golden pocket on the Fibonacci, sitting at approximately 45.4K. In terms of the bullish pennant, it's going to be a bit more conservative. Firstly, it's going to be 44.2, then 45K. So what I'm planning to do is, right, in terms of a take profit target, I'll just set it at 45,300 for now, and we'll see if Bitcoin finds resistance. I'll push it lower. So let's put take profit $45,000 or $45,300. In terms of a stop loss, I want to keep it very tight. So let's switch back into trading view. And if we check out the chart, I want to keep it at like 42,500. So that's what I want to put my stop loss target as. So going back over into Bitflex, I want to put 45,200 and perfect. So it's not going to be too much. It's very well risk managed, and I'm personally willing to take this risk and press confirm. Boom. Let's see what happens. If Bitcoin does break lower, which is always a possibility, even though this pattern is mathematically, it has a higher probability of breaking towards the upside, there is always a chance that Bitcoin breaks below. And in that event, I am expecting Bitcoin to reverse towards the 41.5K level. And at that point, I'll be buying Bitcoin cheaper. That's kind of the plan of action. But in the macro, let's not forget that Bitcoin is attempting to test this line of now resistance back again, which held since October of last year and then broke down in January, mid-January this year. So if we retest it, it's going to be critical because if Bitcoin manages to go above it, that's super bullish. But retest and break down below, that's not nice. It could reverse Bitcoin back towards the 37.8, 37.9K levels. And something to also keep in mind is in terms of on-chain analysis, that is the point where Bitcoin holders, short-term holders, will hit into losses. So usually speaking, on a general basis, Bitcoin tends to come back down to this line of where the short-term holders are basically not profitable anymore, and then see either a bounce or find resistance and continue going towards the downside. So that's why 37.9, 37.8 are both critical levels to be looking out for. But going into towards the fundamental analysis, now this video I'll play from the beginning, because very, very important to watch. It's basically the Fed Chair Powell on an interview with 60 Minutes, and it's not looking good. After this interview, the traditional markets did see a massive drop down. So let me just quickly play it, and then I'll share my thoughts afterwards. So Let me just mute myself. And if I press that, there we go. And yeah.
The U.S. is on an unsustainable fiscal path. The U.S. federal government's on an unsustainable fiscal path. And that just means that the debt is growing faster than the economy.
I have the sense this worries you very much.
Over the long run, of course it does. We're borrowing from future generations. It's time for us to get back to putting a priority on fiscal sustainability.
Yeah, so as you can see, it's not the best of words said by the Fed chair, and it's actually the truth for once, right? The U.S. national debt has hit $34.2 trillion, and eventually this system is going to implode on itself. I am going to be making a podcast with Mr. M going back into when the Federal Reserve started, what was its original kind of, steps into being successful in what its original targets were, but that has shifted across the years, and now it's something completely different. And if Bitcoin or if actually fiat depletes on itself, people would be shifting into Bitcoin because it's just the better asset compared to gold. So that's why it's pretty bullish for Bitcoin, right? And in terms of a hyper Bitcoinization, that's when we can see Bitcoin hit $1 million. That's what we all hope for. So this is bullish. It's a given that the system will eventually, kind of go down as everybody follows a Keynesian economics model. I'll talk more about that in detail in the podcast, but it's just kind of destined to deplete on itself. Now, after this, and of course, we had the FOMC as well. The summary for the entire FOMC in a nutshell was basically they want to keep interest rates at its current level. They don't want to increase it until we hit a 2% inflation target. And in terms of the probability for a decrease in the interest rates, we were sitting at like 60% last week or 2 weeks ago. And now it's been completely reversed. Like there's an 81.5% chance, according to the CME group, that the interest rates stay the same. So not looking good at all. And breaking news, Solana, the blockchain of Solana, has been paused and not working for the past now. Okay, it's back up. Thankfully, it's back up. But prior to this, it was like down for 5 hours. And I think this is because of the Jupe airdrop. The blockchain was just overloaded. Now, Solana, it doesn't tend to stay up a lot. That's the kind of history it has and the reputation it has, but I'm super glad that it's now back and running. Solana does have its issues. It is super centralized, and its blockchain is just not powerful enough to handle high sums of transactions. And for all of the Ethereum ETF bulls, according to James Seyfarth, one of the Bloomberg researchers and analysts that everyone has been following in the ETF space for a while now, basically he mentions that there's a 60% chance of an approval on the 23rd of May. But I would like to beg to differ. Why? Because, well, Ethereum has a long way to go. This was a beautiful thread posted by Scott Johnson. You can check it out yourself. It is a bit of a lengthy read. In summary, we just need to see at least a DCM listing for Ethereum, which will give us more clarity whether Ethereum is actually a commodity or if it's a security. In my perspective, I think Ethereum is leaning towards a security more. Why? Because it promotes staking on its blockchain, and it does have like a CEO basically, and those are a no-go in the Howey test. What's important is we need to wait for the finalization between the Binance and SEC trial and the Coinbase and SEC trial. This will give us a more clarification on whether what altcoins are a security or not. And once we see that, then it should give us a more clear distinction on whether this ETF is going to be approved or not. But in my perspective, it's going to be a little bit difficult. Now, why do I want to bring this point up about, how is GDP calculated? It's important because it talks about why people would actually be using Bitcoin in large nations. So a formula to calculate GDP is by using velocity of money, and you have the total money supply, and then you have GDP. So total money supply multiplied by velocity of money gives you GDP. And what issue we have in the current systems, the financial systems we have across the world, is that money is not instant. So the transaction of money is not instant. Now, what do I mean by this? So if I go to, let's say, a coffee shop and I want to buy a cup of coffee with my credit card, it's first going to go through the POS, then it's going to go to, from Visa, MasterCard, it's going to go to the bank, and then the bank has to approve it, and then it goes to the merchant's own bank account. It's a lengthy process and it takes a lot of time. But with Bitcoin, we know within just approximately 10 minutes from my address to the other person's address, the recipient's address, it takes like 10 minutes. So you're increasing the total velocity of money transacted. If it was like on a Friday night, it may even take over the weekend for the money to be transferred to the merchant's account. With Bitcoin and cryptocurrencies, that's not the case. So by increasing the velocity of the transactions of money, you're actually increasing the total GDP of a country, and GDP measures economic growth. So this is a huge factor into why countries may want to use Bitcoin or in the short term CBDCs. So yeah, just an interesting fact that I wanted to bring up. Now, another key piece of information that happened last week was, of course, FTX wanting to pay back its customers, but they said that they will not open back up again. They've been liquidating a lot of their assets, including their GBTC shares, and they wanted to sell 8% stake in Anthropic. What was super interesting is, of course, when FTX went down, Bitcoin was sub 18K, Ethereum was sub 1.2K, and Solana was below $15. So they're basically their assets now, they're a lot more valuable compared to what they had before. So if they couldn't pay back customers then, they can very well do so now. So that was just something interesting, an interesting data point that I wanted to bring out for you guys. Now, going over into finally basically the spot ETFs, there's not been much going on. The total outflows have been decreased a lot from GBTC. And what we can see is the total inflows into BlackRock and Fidelity are very high, and they compensate for what is being lost by GBTC. And that's the main target that we want to reach. Currently, BlackRock holds 3.2 billion in Bitcoin, but we know over time this sum is going to increase drastically. And after the halving, there's going to be a supply shock and just not enough Bitcoin for everyone. Fundamental economics says that that should cause the price of Bitcoin to hopefully be going up and higher than where it is today. Now, just last point that I want to go into, miners are selling Bitcoin, and this is not concerning because miners selling Bitcoin do happen very usually prior to a halving. It's them just taking profits and either reinvesting into more efficient hardware to adapt to the next halving cycle, or them basically going off the table completely. Now, what I see is a trend for miners. I think only governments will be able to mine Bitcoin because they get energy for much cheaper than you and I. So they will continue, but the retail miner may not be profitable anymore. So in that sense, yes, maybe it's concerning, but I wouldn't be too afraid. They do usually take a lot of profits prior to the next halving cycle. We talked about this already. This I'll go into in the next upcoming videos. Ripple, or in fact, one of the co-founders of Ripple, their account was hacked, but thankfully to law enforcement, a lot of their funds were been able to frozen, and I think it's not bad anymore. XRP didn't have a huge drop because, of course, it doesn't affect XRP directly. And the former US President Trump said that he would fire the Fed chair if he was elected. Does that impact the price of Bitcoin in any way? It could, because we don't know the stance of the next hired Fed chair on Bitcoin. It could be very bad, and that could cause the price of Bitcoin to go down, of course. So the current chair staying is, in my opinion, better because there's no ambiguity, if you like to say. But yeah, that's basically my roundup on Bitcoin. So guys, thank you so much for watching today's video. I know it was a little bit more extensive, but I'm super happy to be back, and I'll be seeing you all much more frequently. So guys, take care, have a nice day, and yeah, I'll see you all very soon. Bye bye.